another peace deal. But will this one be any more effective than the last? Stay with Emirates 24/7. Welcome back to Emirates 24/7. Currency markets were dragged lower against the safe haven US dollar last week as the bearish themes failed to ease up and continued to plague the financial markets for another week.
Lack of positive news flows from the Eurozone, combined with weakening economic docket that saw the common currency drop 1.9% against the US dollar, 1.1% against the British pound, and 1.2% against the Japanese yen. Well, joining us now in the studio to give us the inside scoop on where to invest is Gaurav Kashyap, the head of the DGCX trading desk at Opari Middle East, DMCC. Gaurav, welcome back to the show.
Glad to be here, Omar.
Pleasure. Thank you for joining us. Now, of course, the U.S. was off yesterday, but we saw higher yield investments and the euro having quite a positive start to the week. So take us through what's happened since Monday's opening.
Well, Omar, the euro popped up and it opened at a wider gap in Monday's trading session, primarily because on the weekend we had the Greek exit polls, which showed that the New Democracy Party, which is a pro-bailout party, remember, this is the party that formed a coalition with the POSAC government to basically pass Greece's previous two bailouts. So the fact that they've re-emerged as contenders or as a popular vote has seen the risk appetite return back to the markets, and the whole question about Greece staying in the euro is looking more like a likelihood. And this is why we've seen the higher yielding assets increase against the US dollar. You know, we saw the euro asset class also increase, but unfortunately some of those gains were given back after, of course, another elephant in the room, which is the Spanish banks banking crisis, you know, emerged, and then it kept risk on the back foot.
Tell us just a little more, I guess, about the Spanish banking crisis and how you see that going at this stage.
Well, Omar, we're seeing the Spanish banking situation, it seems like they're reaching a very, very tight liquidity situation. It's estimated that around 180 billion euros of bad debt is being held by these Spanish banks. Just on Friday, we got news from Madrid that their fourth largest lender, Bankia, would request another 19 billion euros in bailout. So now the rumors about Spain and their liquidity situation is also starting to emerge, and the fact of the matter is that they will probably require you know, a combined bailout from the EU and the IMF. So what we're watching for with regards to that is the Spanish 10-year yield. You'll be hearing a lot about that in the trading week this week. We saw the yields pop up to about 6.5%. Remember, when Ireland and Greece requested their bailouts, their yields were around 7%, so it's a very, very dicey time.
So Greece is impacting markets, so is Spain. What else should investors be looking at in particular?
Well, June, definitely the Greece situation will definitely overshadow markets. The way the situation is going to pan out is we have the Greek elections coming on June 17th. Once again, if we see a combination of the ND and the POSAC party combining to form a coalition government, we can expect risk sentiments to come pouring back into the markets, and the euro probably will pop up to about 130 levels, where it's currently trading at 126. But looking forward to it, and the way the popularity vote has been shifting, you know, 2 weeks ago we had the Syriza, which is the anti-austerity measure party, leading polls, and then that led to the sell-off. This week we see the ND party coming back into power. So we expect this time to be very, very uncertain for the financial markets, and it's going to be very, very choppy trading. Along with the situation in Europe, we're paying a close attention to what's happening in the US recovery. It's going to be a very, very big week for the US markets. We have, on Thursday, we have the first quarter annualized US GDP reading, which is expected to come in slightly lower at 1.9%. Remember, this is down from 2.2%. The US has been plagued by sluggish demand. They've had a very, very choppy jobs scenario. We've seen only about 150,000 jobs in last month's jobs report. So this Friday's US non-farm payroll number is going to be very, very key reading and to give an indication of how that recovery is going in the US.
Absolutely. Just turning attention, I guess, to our local markets, well, rather our local situation here. Indian rupee is at an all-time low against the dirham. What was your reading on this? Is this the best time to transfer? What does this mean for our residents here? Obviously, we have a very, very big South Asian population.
Absolutely. Actually, I was talking to several of my clients who, I mean, this has been the trade du jour, basically, and is it the right time to send funds back to India? Now, if you look at the historical charts of the Indian rupee, we're reaching a level that we've not seen in the past several years. And I think whether it's migrating at least 50% or 70% of your savings at a time where the exchange rate is between this channel of 54 to 57 against the US dollar makes absolute sense. So if you're looking at maybe transferring to your mortgage back in India, I think it makes a lot of sense now. We do foresee a little bit of a weaker move in the Indian rupee, probably up towards 57. Once again, the Reserve Bank of India is plagued by higher inflation. Unfortunately, the government's reserves have been slowly depleting, which is why they can't intervene directly. So they really don't have much power or control of how to influence that currency. But definitely after a period of weakness, we can expect it to come back to those 50 to 52 levels.
And another asset class that a lot of people here are invested in is gold. How is gold doing, and what's the correlation with risk?
Actually, June, the performance of gold has been very, very interesting. Traditionally, you ask any gold trader, and he'll tell you that the performance of gold is particularly good when there's uncertain times in the market. Now, we can't have any more uncertain times than what we're seeing right now, but still the gains in gold have been kept very much in check. And this tells me that the correlation between the US dollar and the gold is playing more in favor of the US dollar right now. So there's a lot of fund outflows from currencies like the euro, from out of crude oil. We've seen crude come back to 90 levels. We're seeing gold also dip. We've seen silver also below 30. So what this tells us is there's a big flight to safety, which is the US dollar in this situation. We still maintain that we like to be buying gold at around 1530 levels, a dip below that, and I think it's very, very safe to enter at 1480 with a more long-term type of view. But once again, this can change. As I said, the US data coming out on Friday will play a key role in how the Fed will determine future quantitative easing policies. If they do hint towards more QE3, then we can expect the US dollar to enter an extreme period of bearish sentiment, and all the other assets will move higher against the US dollar.
Well, Gaurav, thank you so much. We'd love to have you on for longer, but thank you for coming to the show.
All right. Of course, we'll check back with you a little bit later in the week. Thank you, Gaurav.
Now, if you want to keep up to date with more top stories of the day, make sure to log on to Facebook and search for Emirates 24/7 on Dubai One.
You can also find us on Twitter, search for @Dubai1TV, and you can follow me on @OmarButti or June on @JuneWrigley.
It's time now for a break, but we'll be right back with why ADNOC's acquisition of 74 Emirate petrol stations could mean cheaper gas for all of us.
Plus, after a catastrophic week of violence in Syria, UN Special Envoy Kofi Annan is meeting with President Bashar al-Assad to try once more for peace. Stay with Dubai One.